John Higgins, Mortgage One. Happy Monday. So, one thing that I wanted to bring out is interest rates certainly are never going to get back to 3% without some kind of major calamity like a pandemic. But what we should be telling our clients is that over the last year, we've seen mortgage payments come down by nearly 8%. And what does that mean as far as purchasing power? Well, we're up 30,000 from just a year ago. As we head into the spring selling season, now's a great time to get out there and talk to your clients about how great it is to buy a home now that interest rates are, bouncing down around that 6% level. With a little bit of luck, if we get some of the geopolitical issues to calm down, we might break below 6% again here soon. But really, as we head into the spring season, it's really not a bad time to buy. The market has been more balanced between buyer and seller. So a great time to buy for sure. Now, if you're working with buyers in Detroit, well, the Detroit Down Payment Assistance Program offering up to $25,000 is back. There's $9 million in the fund. That should get us about 360 loans. This program has been a huge success over the last couple of years. A couple quick eligibility requirements. Buyers have to have resided in the city for the past 12 months, can't have owned a home in the last 3 years. It is available for both 1 and 2 units. So this is a little bit different than most of the down payment assistance programs out there. You can buy a duplex or an upper and lower flat. Buyers do need to contribute at least $1,000 of their own funds to purchase the property, and we have to be very careful on the income limitations. There are household sizes from 1 to 8, so starting around 50,000 and going up. So give me a call if you'd like to get your Detroit buyers pre-approved. The money will not last long if history repeats. This program's been around for a couple of years. It usually goes in about 3 to 4 months. So give me a call with questions, and let's get those buyers pre-approved right away. Big week on economic news. We've got retail sales on Wednesday. We get a gauge of inflation, the producer price index, and then the FOMC meeting. Does not look like the Fed is going to cut rates. I think there's less than a 1% chance on the prognostication markets. And then new home sales on Thursday. Unless we see oil start to retreat in that, we're not going to see the Fed step in and lower interest rates anytime soon. Oil is a real big push for higher inflation, and the Fed certainly is going to be sitting on its hands. Where does that leave our 10-year Treasury? Well, the 10-year has been on fire, broke through 420, having a hard time getting below that. We seemed to wait around for months and months and months to get below 420, made that break and got all the way below 4%, as you can see on this year-to-date graph. And with the issues over in the Middle East, our rates just skyrocketed higher. It has not crushed our mortgage interest rates. If you look at where the 30-year fixed money is at, we're still just slightly above 6%. So depending on your buyer's credit score in the program, still not bad. We're a lot better off than we were a year ago. So we'll see what transpires over the next week or so with regard to the Middle East. If we get the Strait of Hormuz to open up and get oil prices to sink a bit, we could start to see that 6% number come back into play on 30-year fixed mortgages. Want to wish everybody a happy St. Patrick's Day tomorrow. Certainly have some fun. Be safe. We'll talk to you next week.